Imagine a company that's battled this tough, high-cost reputation for years, pouring capital into these massive projects only to emerge as a potential free cash flow powerhouse right when its market goes absolutely parabolic. This is a turnaround story you can truly believe in. Today, we're taking a deep dive into Coeur Mining, CDE, to see if it's finally shed its past and, positioned itself as a North American precious metals leader for this new bull market.
Exactly.
And hey, if you're as fascinated by mining companies as we are, please like and subscribe to the 1 Ounce YouTube channel. We cover all sorts of mining companies, and we absolutely take requests for stocks in the precious metal space.
That's right. So our mission today is this deep dive into Coeur Mining, Inc. Trades on the NYSE, ticker CDE, HQ in Chicago. And just for context, our analysis is current as of August 22, 2025, with the share price sitting at $12.07.
Okay.
And the big question we're exploring is this. Has Coeur genuinely transformed into a free cash flow machine? Has it really left that high-cost image behind?
So let's start by digging into the very core of Coeur's business. What exactly does this new Coeur look like on the ground? How are they positioning themselves as this North American powerhouse?
Okay, let's get into Chapter 1. Business Analysis, the new Coeur, a North American precious metals powerhouse.
All right.
So at its heart, Coeur Mining is a primary precious metals miner. They're involved in pretty much everything, exploration, development, actually operating their own mines.
The whole chain.
Yeah, the whole chain. Their model is, well, pretty straightforward. Extract gold and silver ore, process it into doré, that's like a semi-pure alloy bar or maybe a more refined concentrate, and then sell these products to refiners.
Okay.
What's really key here strategically is their focus on North America. It's a portfolio they proudly call their U.S.-centric model.
Right.
As of Q2 2025, about 55% of revenue is from the U.S., 45% from Mexico. And they operate 5 wholly owned mines.
5 mines. Okay, where are they?
In the United States, you've got the Rochester mine in Nevada. That's a huge open pit heap leach silver gold operation. Just finished a major expansion, actually. It's really a cornerstone asset, especially for their long-term silver output.
Right, the big one.
Then there's the Kensington mine in Alaska, that's an underground gold mine, and the Wharf mine in South Dakota, an open pit gold mine that's been remarkably a consistent producer for over 40 years.
Wow, 40 years.
Yeah. Then down in Mexico, they have the Palmarejo complex in Chihuahua. That's a significant gold-silver operation. But the real game changer, I think, is the Las Chispas mine in Sonora.
Ah, Las Chispas. Heard a lot about that one.
Exactly. High grade, low cost. It was a truly transformative acquisition from SilverCrest Metals earlier this year, February 2025. They also hold the Silvertip project up in BC, Canada. That's a high-grade silver zinc lead exploration asset with, future potential down the road.
You highlighted Las Chispas as transformative. I mean, beyond just boosting production numbers, how has it really shifted Coeur's strategic resilience, against localized problems? What does that mean for their growth long term?
That's a great question because it really does go beyond just adding ounces. Las Chispas has been absolutely pivotal for diversification.
Okay.
So now, no single operation accounts for more than 25% of their total revenue.
Ah, that's smart.
Yeah, it means if there's a localized issue, a problem at one mine, it has a far less dramatic impact on their overall financial health. It significantly strengthens their resilience.
Makes sense.
And this diversification, combined with that big Rochester expansion, is fueling some pretty remarkable production growth. Look at 2024. Coeur produced just over 341,000 ounces of gold and 11.4 million ounces of silver.
Okay.
Now, for 2025, the guidance points to a substantial jump. 380,000 to 440,000 ounces of gold, and an impressive 16.7 to 20.3 million ounces of silver.
Whoa, hold on. A silver number.
Yeah, it's huge. That's roughly a 20% increase for gold year over year, and a massive 62% jump for silver.
62%.
62%. And as of Q2 2025, their revenue mix was running about 67% gold, 33% silver.
That 62% growth in silver is really something. And, reserve life is always critical for miners, right?
Yeah.
Their long-term outlook. Coeur reported 3.6 million ounces of gold and 270.5 million ounces of silver reserves at the end of 24.
Correct.
So based on that 2025 guidance, what does that translate to? about 8.8 years for gold, and wow, 14.6 years for silver. That Rochester deposit must really anchor that long silver legs, gives them predictability, especially being in Nevada.
Absolutely. And historically, you're right, Kerr battled that high-cost producer reputation. It kind of stuck with them.
Yeah, for years.
But the current investment case really hinges on the fact that this perception is changing, and pretty dramatically. We're seeing rising grades and falling unit costs across their portfolio now.
Okay, give me an example.
Well, Palmarejo, for instance. Gold and silver grades jumped there, which brought down their cost applicable to sales, or CAS. That basically captures their direct operating costs.
Right, CAS, not AISC, though.
Exactly. It's important to note CIS isn't directly comparable to the all-in sustaining costs, the AISC, that many peers report. AISC includes more long-term capital, exploration, corporate overhead.
Gotcha.
But the falling CAS clearly indicates improving cost competitiveness within Coeur's own operations. And that's central to the turnaround story.
So Coeur's making these big internal moves, transforming operations, shoring up reserves. But, no company operates in a vacuum, especially mining.
Yeah.
What's the wider market looking like for them? Is the macro environment really helping them out?
They couldn't be in a much better spot, frankly. Coeur's operating within a really powerful bull market for precious metals.
Yeah, prices have been wild.
Absolutely. As of our analysis date, August 22nd, 2025, gold's trading around $3,367 an ounce, and silver's up around $39 an ounce.
30.
Yeah. And this isn't just, a fleeting moment. It feels like a firm bull phase in the long-term commodity cycle. Gold hit new all-time highs this year.
What's driving it?
It's a mix. Persistent inflation, geopolitical tensions, expectations of Fed rate cuts eventually, and just robust demand from both investors and central banks. Global gold-backed ETFs saw their highest inflow since 2020 in the first half of this year alone.
You've painted a strong picture for gold. But what about silver? Is its story just as compelling for Coeur, or are there maybe different dynamics making silver particularly attractive right now?
Silver's story is arguably even more compelling, I'd say, with some very specific dynamics that really benefit Coeur. We're looking at a structural supply deficit for the 5th year running.
5th year, wow.
Yeah, the Silver Institute is forecasting something like a 117.6 million ounce shortfall for 2025. And this is driven by record industrial demand.
Industrial demand, okay, from where mainly?
Primarily from the green energy transition. Think solar panels. They use a lot of silver. And also new tech like 5G, automotive electronics, even AI infrastructure. Industrial use now accounts for the majority of silver consumption.
Huh. Didn't realize it was that much.
Yeah. So Coeur's significant ramp up in silver production, that 62% jump we talked about, it's perfectly timed to capture this accelerating industrial demand. It turns a general market tailwind into a very specific potential advantage for them.
That is a powerful combination. Internal transformation meeting external tailwinds. But what about the nitty-gritty? Day-to-day operating costs for miners like Coeur, how does that play into profitability, especially with those Mexican operations?
Right. Costs are always key. Their primary operating costs are things like labor, energy, diesel, electricity, and chemical reagents like cyanide for processing.
Standard stuff.
Pretty standard for the industry. For their Mexican operations, though, the fluctuating exchange rate between the Mexican peso and the U.S. dollar is also a pretty significant cost driver. Impacts their local expenses, obviously.
And competition. Who are they up against?
In North America, they compete with other mid-tier and major producers. Think Coeur Mining, Pan American Silver, First Majestic Silver, Endeavor Silver, those kinds of names.
Right. Now, the regulatory environment, that can be a minefield itself in this industry. How does Coeur navigate that, especially juggling the U.S. and Mexico?
Indeed. It's definitely something they have to manage carefully. In the U.S., it's a relatively stable framework. You've got laws like the Mining Law of 1872, oversight from agencies like the BLM, the EPA. Predictable, mostly. Mostly. There's always the potential for curveballs like new tariffs. The U.S.-imposed tariffs of 2025 talk create some uncertainty. But Mexico, that presents a more pronounced risk right now.
Yeah, so?
Well, under President López Obrador and now his successor, Claudia Sheinbaum, the government has effectively halted issuing new mining concessions and has generally tightened regulations.
Not great for expansion.
It creates a more restrictive and, frankly, unpredictable operating landscape. And that's particularly relevant since Mexico hosts their high-grade, high-margin assets like Palmarejo and, crucially, Las Chispas.
So, okay, mining has high barriers to entry, massive capital needed, multi-year permitting, deep expertise. How does Coeur manage to stand out in this tough landscape, especially given those historical cost challenges?
What's kind of fascinating here is how they've almost turned that historical weakness, their cost structure, into a strength, or at least addressed it head on.
How do you mean?
Core's competitive edge now lies in its established portfolio, but strategically enhanced by that Las Chispas acquisition. That mine is genuinely one of the world's highest grade and highest margin primary silver operations. It fundamentally lowers Core's overall consolidated cost profile and significantly boosts their cash flow potential.
So Las Chispas really pulled down the average cost.
Exactly. Plus, management has been pretty shrewd over the years, historically using derivative contracts to hedge metal prices during those heavy investment periods. That helped mitigate downside risk while they were spending big on Rochester.
Smart.
So while that Q2 2025 peer cost comparison table we mentioned shows Coeur's CAS isn't directly comparable to peer AISC, it absolutely shows improving cost trends within Coeur's own operations. And that's the crucial trend to watch for this turnaround.
This transformation sounds impressive, but who's actually been steering the ship through all this? Let's take a closer look at the management team and their strategy.
Right, let's move on to Chapter 2. Management evaluation steering the ship through transformation.
Right.
One key point is stability. Coeur Mining has enjoyed leadership stability with Mitchell J. Krebs as CEO since way back in 2011.
Wow, long tenure.
Very. And he's really been instrumental in restructuring the company, things like moving the HQ to Chicago, focusing intently on lower risk jurisdictions, primarily North America.
And the team's track record.
It's pretty solid. They've consistently invested in exploration. They've got a $100 million budget for 2025. They've successfully expanded resources at places like Wharf and Palmarejo, extending mine life, which is absolutely crucial for long-term sustainability.
Right. Keep finding more ore.
Exactly. They've also expertly navigated some complex permitting processes, securing crucial approvals for that big Rochester expansion, and also for Kensington's tailings capacity. And, in terms of communication, Coeur maintains a high degree of transparency. Detailed financial reports, regular earnings calls. They even put out an annual responsibility report covering ESG metrics.
Okay, so stability, exploration success, transparency. But for years, like we said, we saw Coeur pouring capital into huge projects like Rochester. What exactly shifted in management's strategic thinking that now lets them pivot away from that heavy investment phase to something new?
That's a really critical observation. You're right. For a long time, they were deep in that heavy investment cycle. The Rochester expansion was massive.
Yeah.
Then followed by the all-stock acquisition of SilverCrest for Las Chispas. Huge outlays. But now management has clearly, very clearly, pivoted to a new phase. The focus now is squarely on harvesting the returns from those investments and generating value.
How are they doing that? What's the plan?
This new strategy really rests on three pillars. First, aggressive deleveraging, getting the debt down.
Okay.
They fully repaid their $110 million credit facility in Q2 2025. Boom, gone. This caused their net leverage ratio, basically debt compared to earnings, to plummet from 4.0x down to a much, much healthier 0.4x.
Ooh, difference.
Massive. Second pillar, initiating shareholder returns. They announced a $75 million share repurchase program back on May 27, 2025, and they've already started buying back shares.
The buyback. That's a big signal.
It really is. And the third pillar is continued, sustained organic growth, but focused on high-return exploration within their existing footprint.
A share buyback is definitely a strong signal of confidence. But, for a company that historically burned through cash on big projects, how do we know this isn't just temporary? What makes this inflection point feel truly sustainable this time?
That's a very fair challenge. And what makes it feel sustainable, I think, is the underlying improvement in operational efficiency combined with that strategic shift to cash generation.
Okay.
Look, companies deep in heavy CapEx cycles typically don't buy back shares because they need every penny of cash for the projects.
Right. Makes sense.
So this move signals management's strong conviction that the record free cash flow they generated in Q2 2025 isn't just some one-off fluke. They believe it's the start of a sustainable trend, validating that long-term investment strategy finally paying off.
Any metrics back that up?
Yeah, look at their return on invested capital, ROIC. That measures how effectively they're using capital to generate profits. It has significantly improved, hitting 9.83% recently. That's a stark contrast to its 5-year average, which was actually negative 0.4%.
Wow, negative to almost 10%.
Exactly. That turnaround in ROIC is a clear indicator of much greater capital efficiency and hopefully sustainability going forward.
Okay, so with all these strategic shifts, operational improvements, what does this actually mean for the financials? Let's dive into the raw numbers. Are they really reflecting this move from cash burn to potentially a cash flow machine.
All right, let's get into the numbers. Chapter 3, Financial Analysis, from cash burn to cash flow machine.
Let's see it.
Right now, Coeur Mining has a market cap of around $7.76 billion. And their revenue, it's been on a strong upward trajectory, especially this past year.
Okay.
Trailing 12-month revenue, as of Q2 2025, hit $1.46 billion. That's a remarkable 64% year-over-year increase.
64% growth. That's huge.
It is. And if you look back, say, at our 5-year revenue trend table, table 2 in the source, it's a clear climb from about $690 million back in 2020 up steadily to that $1.46 billion TTM now.
And profit margins. You mentioned they were negative for years. What's happened in 2025?
A dramatic expansion. Just look at these numbers. Gross margin is 47.02%, operating margin 26.34%, and net margin 13.06%.
That's a massive turnaround.
Okay.
What do these margins really tell us about the business health?
They're a huge indicator of efficiency and potentially pricing power from those higher metal prices. It signifies Coeur isn't just growing the top line, the revenue, but they're retaining a much larger chunk of that revenue as actual profit.
Better cost control, good prices.
Exactly. But the most critical financial trend here, the real core of their transformation story, is free cash flow generation.
The FCF.
The FCF. For years, like you said, Coeur had negative FCF. They were pouring capital into growth. That has reversed, and dramatically, after burning through $289 million in FCF in 2023.
Yeah, that's a big negative number.
It is. But then, in Q2 2025 alone, they generated a record positive $146 million in free cash flow.
Wow, in just one quarter.
Just one quarter. And management has actually guided for full year 2025 FCF to exceed $400 million.
$400 million plus.
Yeah. That truly signals a new era of financial strength where the company is self-funding its needs and can actually start returning capital to shareholders.
That is a monumental shift. From burning almost $300 million to generating over $400 million. And you said financial stability looks solid too. 5 straight quarters of positive net income.
Indeed. That consistency is building, and their balance sheet has strengthened considerably alongside this.
How so?
The debt-to-equity ratio. It's dropped from almost 44% 5 years ago down to a very manageable 10.3% as of June 2025. Shows they're far less reliant on borrowed money now.
Much safer.
Much safer. And their current ratio, which measures short-term liquidity, is a healthy 1.61, means they have ample short-term assets to cover their immediate liabilities. Strong liquidity. It is worth noting, though, they don't currently pay a dividend.
Right, focusing on buybacks for now. Now, the big question, how is the market actually valuing this transformation? Are investors buying the story? Is it reflected in the price, or is there maybe still room for a re-rating?
Yeah, let's look at valuation. The TTM PE ratio trailing 12 months is around 31x. Now, that seems high.
Yeah, 31 sounds punchy.
It does, but you have to remember this is based on earnings that are ramping up incredibly fast right now. The forward PE, which looks at anticipated future earnings, is a much more competitive 15.8x.
Okay, that's more reasonable.
Yeah, their price to cash flow is around 15.7x, which seems reasonable too. Price to net asset value, or PNAV, is about 2.83x. That means the market values their assets at nearly 3 times their accounting book value. That's pretty common for growing, profitable miners with strong reserves.
The market sees future value beyond just the current books.
Exactly. And another metric, enterprise value per ounce of gold equivalent in reserves, is around $11,199. That's a useful benchmark for comparing across the sector.
What about intrinsic value? Any DCF work?
Yeah, an earlier discounted cash flow analysis using a 7.6% discount rate calculated an intrinsic value of $9.52 per share. Now, it's important to remember, updating that model with management's much more aggressive $400 plus FCF guidance for 2025 would likely yield a higher value.
But maybe not way above the current price.
Probably not dramatically above the current market price of $12.07, suggests that the market has already recognized a good chunk of this turnaround and priced it in, fairly valued for the current trajectory, perhaps.
Okay, that gives us a solid financial snapshot. Let's shift gears now into Chapter 4, Market Sentiment. How is the broader market actually perceiving Coeur Mining right now, beyond just the analysts and the numbers?
Market sentiment seems overwhelmingly positive, actually.
Really? Across the board?
Pretty much. Wall Street analysts have a consensus strong buy rating. Their price targets range from about $9.70 on the low end up to $12.90 on the high end.
So the current price is within that range?
Right in the middle, yeah. And the media tone has been highly favorable, especially after those record Q2 2025 earnings came out. News flow consistently highlights the deleveraging, the production growth, and, of course, the transformative impact of Las Chispas.
And that sentiment lines up with the metals themselves, right?
Yeah, absolutely. It's strongly correlated with the robust performance of gold and silver prices this year and just broader, strong investor interest in precious metals, ETFs, and mining stocks in general.
What about technical market indicators? Charts, trading patterns, are they pointing bullish too?
Yeah, technical indicators look very strong indeed. Short interest, that's the percentage of shares held by folks betting against the stock, is really low, just 2.99% of the float.
Very few bears then.
Very few. And the days to cover ratio, how long it would take shorts to buy back shares, is also low at about 1.4. So yeah, significant lack of bearish conviction.
And price trends, moving averages.
The stock is trading well above both its 50-day moving average, which is around $9.60, and its longer-term 200-day moving average at $7.19.
All out uptrend.
Definitely.
Oh.
In fact, back in May 2025, the stock experienced what traders call a golden cross. That's a pretty significant bullish long-term momentum indicator where the shorter-term 50-day average crossed above the longer-term 200-day average, often signals strong upward price momentum ahead.
Interesting. Okay, strong sentiment, bullish technicals. Now let's turn our attention to Chapter 5, ownership structure. Who actually owns a piece of Coeur Mining? Let's look at the stakeholder analysis. Who's betting on this?
Well, Coeur's ownership is really dominated by institutional investors. Big money.
Like who? Pension funds, mutual funds.
Exactly. They hold somewhere between 72% and 80% of the outstanding shares. Major asset managers you'd recognize. The Vanguard Group holds almost 10%. BlackRock has about 9.5%. Van Eck Associates, known for their gold ETFs, holds over 7%.
Okay, so the big players are in. What does that tell us?
It provides a pretty stable shareholder base.
Yeah.
It also reflects Coeur's inclusion in major market indexes and those important sector-specific ETFs, which automatically brings in institutional money.
What about insiders, management directors? Are they holding much?
Insider holdings are relatively low, actually, around 1.5%.
Only 1.5%. Is that a concern?
Not necessarily. What's kind of fascinating here is, yes, there has been some insider selling recently, but you have to put it in context.
Oh.
It's happening after the stock has had a nearly 90% year-to-date gain.
Ah, right. Big run-up.
Exactly. So this selling looks much more like opportunistic profit-taking and maybe some personal diversification after a huge run in the stock price rather than, a negative signal about the company's underlying fundamentals or future prospects.
Gotcha. Selling into strength after a massive gain makes sense. Okay, every investment has risks, rewards, no matter how good the story sounds. Let's try and frame those clearly with a SWOT analysis for Coeur Mining in Chapter 6. Risk assessment.
Absolutely. Understanding the risk is crucial. Let's break down the SWOT.
Go for it. Strengths first.
Strengths. Coeur now boasts a much more diversified asset portfolio, especially with Las Chispas. They have a genuinely transformed cost structure. Again, thanks largely to Las Chispas. Strong production growth is undeniable, that 20% for gold, 62% for silver in the 25 guidance. Their balance sheet is vastly improved, net leverage down to just 0.4x, and critically robust free cash flow generation is now happening.
Okay, solid strengths. What about the weaknesses?
Weaknesses? Well, they still battle that legacy high-cost reputation, even if it's changing. It takes time for perception to catch up fully. They don't currently pay a dividend, which some income investors might not like. And looking back, there has been past shareholder dilution during those prior growth phases when they issued stock.
Right. History matters. Opportunity.
Opportunities. The strong precious metals market is a massive macroeconomic tailwind right now. Huge opportunity there. There's also significant exploration upside. That $100 million budget could yield resource expansion. And there's always potential for ongoing operational optimization at key assets like Rochester, squeezing out more efficiencies.
Makes sense. And finally, the threats. What keeps management up at night?
Threats. Commodity price volatility is always number one for miners. Their financials are highly sensitive to where gold and silver prices go. Geopolitical risk in Mexico is arguably the most significant specific threat right now.
Because of Las Chispas being there.
Exactly. That restrictive government stance, the halt on new concessions, it directly affects their high-grade, high-margin assets there. There's also some geopolitical risk in the USA from potential new tariffs, maybe less probable, but still there. And, of course, increasing ESG scrutiny and regulatory pressures across the board could lead to higher compliance costs or permitting delays.
Okay, that gives a clear picture of the landscape. Let's try and bring this all together now. What's the synthesis? Our main findings for Coeur Mining in Chapter 7. Conclusion.
Okay, wrapping it up. The bull case for Coeur Mining is, I think, pretty compelling. It really rests on this successful multi-year strategic transformation. They've emerged as a more diversified, lower cost, and rapidly growing North American precious metals producer.
Right.
They've clearly transitioned into a genuine free cash flow machine. You see it in the record Q2 results, the aggressive deleveraging, and now the shareholder returns via buybacks. They seem perfectly aligned with the strong, ongoing precious metals bull market.
Okay, that's the bull case. What about the bear case? Why might someone be cautious?
Well, the bear case highlights their high leverage, fundamentally, to inherently volatile gold and silver prices. If metals turn down, Coeur will feel it. There's also that significant geopolitical risk in Mexico we just discussed, which hosts those crucial high-grade assets.
Yeah, that's a big one.
And finally, after that nearly 90% run year to date, the stock's valuation isn't exactly undiscovered anymore. Much of the good news, the turnaround story, might already be reflected in the current share price.
So, not a hidden gem, perhaps. What's the valuation summary then, overall?
Relative metrics like forward PE around 16x, PNAV around 2.8x show Coeur as competitive within the sector, but not necessarily cheap. That earlier DCF analysis pointed to an intrinsic value around $9.52 a share.
Right.
And while updating that model with the aggressive 2025 FCF guidance would likely push that intrinsic value higher, it probably wouldn't be dramatically above the current $12.07 market price. Suggests it's perhaps fairly valued for its current growth trajectory.
So, the concluding outlook seems to be, Coeur Mining has successfully transformed. The market has definitely rewarded it. It's now looking like a high-quality growth story. Highly leveraged to the precious metal cycle, but maybe not a deep value opportunity anymore.
That sums it up well. Our base case outlook assumes, relatively stable gold and silver prices around current levels. In that scenario, Coeur should comfortably meet its $400 million plus FCF guidance for 2025, continue to strengthen its balance sheet, probably keep buying back stock, and perform generally in line with the broader precious metal sector. Continue that re-rating process.
And the bull case outlook, if things go really well.
Oh, the bull case is exciting. If precious metals really accelerate, maybe gold pushes towards $3,600, silver towards $45 an ounce, Coeur's cash flow generation would be immense. FCF could substantially exceed guidance. That could lead to accelerated buybacks, maybe even the initiation of a dividend finally, and potentially a significant re-rating of the stock to the upside as multiples expand. Conversely, the bear case outlook involves, say, a sharp correction in metals prices. Combine that with maybe some operational issues popping up at a key mine or significant negative regulatory developments down in Mexico, such a scenario could easily lead to missed financial targets, maybe a guidance cut, and likely underperformance as investor confidence in that cash flow sustainability starts to wane.
Okay, so Coeur Mining's journey from that high-cost producer label to a disciplined, cash-generating precious metals company, it really is a compelling story of strategic transformation. It highlights how targeted investments, shrewd management, can fundamentally shift a company's trajectory, especially in a dynamic industry like mining.
It really does. And maybe a final thought for listeners. What aspect of Coeur Mining's journey, from that high-cost past to this potential free cash flow machine, resonates most with your understanding of what makes a successful turnaround story? And maybe think about how that ongoing global shift towards green energy might continue impacting the demand and the value of silver, making companies like Coeur potentially even more pivotal down the road.
Lots to think about there. We hope this deep dive into Coeur Mining has given you plenty to mull over. Don't forget to like and subscribe to the 1 Troy Ounce YouTube channel for more deep dives into mining companies, and please feel free to send in your stock requests.
And just the standard disclaimer. This analysis was generated by an AI system for educational purposes and should not be considered financial advice. Please always conduct your own research or consult with a qualified financial advisor before making any investment decisions.
Yes, and it's important to remember that all the research and analysis presented here was generated by an AI system, based on the source material provided. While every effort is made for accuracy and impartiality, listeners should just be aware of its origin.